Good evening, all the joinees. Thank you so much for joining in. Hi, this is Prajakta. I would like to warmly welcome you all on behalf of NGEN Research. Meanwhile others join, I will quickly introduce our topic for today. So, our topic-related webinar would revolve around performance comparison of mutual fund schemes today. In that, we will see how the performance parameters, various different parameters, we can compare it along with a relevant benchmark. In addition to a relevant benchmark, which is like an index, we will also see how we can compare it with a category average. Right, we will see which of the funds really outperform it and which does not. Right, we'll have a look at that. After that, we will move over and understand rolling returns analysis and what are the nuances of that. How can we understand in a particular target return range of a client, which might be specified. How can we check that what is the probability of each of the funds that give returns in that target return range? We will see that using the rolling returns analysis. After that, we will move over and understand the risk versus return scatter plot that is really there in the compare section of NGEN Markets. And we will see with these two parameters, first of all, how do you read that? And once that is through, how you can actually take decisions on the basis of this analysis. Post that, we will see how we can do a scenario analysis or a point-to-point analysis using a very important tool on NGEN Markets, which is point-to-point analysis. After that, we'll throw the forum open for a Q&A session, wherein you can get your questions answered by either typing it in the chat box or unmuting yourself to speak. So let us now begin. For the purpose of our webinar, we are directly going to focus on the funds and the compare section today. So for an example, we will consider all the large cap funds today and see how do they perform against a relevant benchmark. So first of all, go to the fund section. When you go to the land on the funds section, you will see that there are tabs which will let you filter categories of all the mutual funds. So this is like a screener of all the mutual funds that are currently trading in Indian equity markets. Okay, you click on filter categories, you will see 4 different buckets. So equity, debt, hybrid, and others. All the mutual fund subcategories are classified in each of these 4 buckets. Now, because we are going to focus only on large cap funds, I will just choose or tick on large cap funds. Okay, I click on that, I click on close. Now, whatever I can see right now are all the large cap funds currently trading on Indian equity markets. Now, I would not like to, really do an analysis on all these parameters, because these are all the, equity fund from the equity bucket. And therefore, these columns become really irrelevant columns for all the equity asset class analysis, right? Net YTM, duration, and so on and so forth. So for that, we want to keep it concise and we want to have a crisp view of that and relevant view. So for that, we have given a drop down wherein you can choose a view. So in this case, just click on this drop down and choose equity columns only. There's the second last option, equity columns. And you will see all the junk on the irrelevant columns going away. Right now, you can see only those parameters which are really relevant for screening of equity mutual funds. Right. So, of course, the P/B ratios, the large cap, mid cap, small cap split of the portfolios. So in spite of the fact that all of these are large cap funds, they still hold some percentage into mid cap. And some percentage into small cap, right? What are their Sharpe ratios, value at risk model? All of these are relevant parameters to really screen large cap funds. And of course, after that, it's a performance. So since inception, what is the performance of these funds? Right, then for a calendar year, specific calendar year, so these are the performances of these funds for a specific calendar year. And then of course 1 year, 3 year, 5 year returns, all of these are there. Right, that's how you can actually choose this view that you want and only see relevant columns. Once this is through, I would not like to analyze all the large cap funds. I would rather specify some filter parameters with respect to its AUM or age for that matter, and take into consideration only those funds which have been around at least for a 5-year period. Right. Therefore, I really, ensure that I'm not comparing a very, very young fund with a fund which has been around for, let's say, last 30 years. Right. So for that, you can use this filter parameters. Firstly, minimum age. So I specify 5 as minimum age. And every time I specify a filter parameter, in order to take effect, you have to click on apply. So the moment I click on apply, this list will get shortened and only those funds will be visible which actually fulfill this parameter. Okay. Now I will just go ahead and put in AUM as a parameter. So this is the minimum AUM. So I want to have only those funds who have at least a AUM of 1,000 crore and above. So I just put in 1,000 crore here and I click on apply. Right. So in this case, you can see that now the lowest AUM is with Bandhan Large Cap Fund, which is 1,168 crore. On the other hand, the highest AUM is with a ICICI Prudential Blue Chip Fund. Once this is through, we will now like to set in some minimum basic non-negotiable return parameters. Okay, because we are investing into equity mutual funds, we take in considerable amount of risk. Of course, these are not small caps, so the return expectation has to be in accordance with that. So you cannot really expect typically you cannot really expect more than 20% from a large cap fund, right? So typically in the last let's say you want to specify a minimum non-negotiable return expectation from all the large cap fund investments that you are trying to make of annualized return of at least a 12%. That's something that is a basic non-negotiable parameter according to you. Of course, this can be different for different investors or for different client risk profiles, right? But I'm just considering a 3 years annualized return of a 12%. For that, you just have to click on this drop down. Okay, so what this says is minimum 3-year annualized return is what we are specifying right now. So I will specify this as 12%. And again, as I've put this as a parameter, I click on apply. Okay, now how will I ensure that this has been applied? Right, so just using the scroller, scroll on the extreme right hand side.
Sorry, Prajakta, just one thing. Sorry to interrupt. Can we do your like from the drop down list only, or can we change it for 4 years or something which is not mentioned in the list?
Yeah, so whatever is mentioned in the list can only be taken as of now in this case in the fund section at least.
Okay.
If I would may request, can we take all the questions towards the end?
Okay, sure. Sorry to interrupt.
No problem. Thank you. So I have put in minimum 3 years as a parameter and annualized returns of 12. Once this is through, how will I check that if this has been applied or not? So just click on this column heading 3 years and you will see that the minimum, sorry, in this case, one second. Yeah, so the minimum 3-year annualized return that I have is 14% and above. It can go up, I mean, it has gone as high as 27%. Right? So this is how I ensure that everything which is less than 12% return, annualized return for a 3-year period, that all of those funds have been excluded. And how do you know if this is annualized return or absolute return? Exactly that is written here. So returns over 1 year are always shown annualized. There's a clear disclaimer that we have provided. So every period that you input here, which is more than 1 year, we are going to show annualized returns only. So in this case, this 5-year column that you see, these are going to be annualized 5-year returns of each of these funds. Okay, everything more than 1 year. Okay, now once this is through, now we would like to go ahead and take all of these funds in the compare section for further analysis. So how can you do that? You can just click on this add top 50 to compare. By one single click, all of these funds up to 50, if there are in the fund section, can be added in the compare section in one single click. Okay, so I just click on this. All of the 17 funds have gotten added in the compare section, right? It'll take about a couple of seconds and we can get all of these data. Okay, so 17 large cap funds, which obviously specify or satisfy all of our parameters, and then we have it in the compare section. Now, this is where you will actually compare its performance against a benchmark. You can add in a category average, and you can actually check, okay, individually or in itself, it's fine. Okay, these have generated 12% or above annualized 3-year return, but how will you check if it's decent or not? You will have to compare it with something, right? Only then will you understand, okay, whatever funds I'm choosing is fine, or it is outperforming the benchmark, right? So you will have to add in a comparative parameter for that. So how will you add a benchmark here? So go at the top in the compare section. There's a tab, add other items. Here is where you should add a benchmark to this. So for benchmark, we will add in, because these are large caps, of course, let me add in Nifty 100 as a benchmark. So I just choose Nifty 100, and that index has gotten added as a row item. If you can see, it's right here. This is a row item of the particular index. Now, once this is through, now I will just choose one particular parameter that I want to see the performance on. Let's say I want to see their CAGRs, all of these funds CAGR. I just click on CAGR as a column heading, and all of this gets sorted in descending order, ascending or descending order, right? So in this case, it is sorted in ascending order. So I can see that, okay, the benchmark or the Nifty 100 returns, CAGR returns, have been a 15.36%. Okay, all of this is as of now since inception only. Okay, so we have not set in any start date here. Therefore, I'm saying that everything is from the inception or the minimum common period that is under consideration, right? So in this case, the CAGR of the index is a 15.36%. Everything or all the funds that appear above this particular percentage have actually not managed to beat the benchmark with respect to CAGR as a parameter. On the other hand, all of these, right? So typically these funds have actually managed to outperform the benchmark if CAGR as a parameter is taken into consideration. But now, as you can see, if you sort this on the basis of age, you will see different, they have been around for different periods, right? This will not be a fair comparison. You would have to specify a common start point to ensure that this analysis that you're doing is a fair analysis. So for that, we go to the return columns. Beside that, there is a settings wheel that is given. You click on that and you can specify a date here. Let's say we are doing this analysis from 2019. Okay, so you go here in the start date and I specify 2019, and let's say 2nd of September. Once I've put in the date, you click on go. Okay, now you will see that this CAGR column is now showing the CAGR of these funds from 2019, from the start date that we have specified. Okay, so in this case, the benchmark or the index is somewhere here. So in this case, I've sorted this on the basis of descending order. So this is descending, highest to lowest. So HSBC, DSP, LIC, and Axis. These are the 4 funds which have not managed to outperform the benchmark. The benchmark CAGR is a 14.74. All the other funds, however, have managed to beat or perform better than the benchmark returns. Okay, with respect to one parameter, which is CAGR. Now I will explain what is this cumulative return. So if you want to see absolute return for the time period that you have taken, okay, not annualized, not CAGR, what are the absolute returns or returns on a cumulative basis, right? This is the column that you should be focusing on. Of course, this will be populated only when you put in a start date here. When this was not put, this was nothing was mentioned here. This column, if you would have noticed, it would have been blank, right? There was no data here. Now that we've put in a start date, it says that, okay, cumulative returns for the last 4 years period, 2019 to 2023, September to September, they have been these. So if I just, sort this ascending, descending. So Axis is given a 57% return, which is the lowest in this entire lot. On the other hand, the highest has been given by a Nippon India large cap fund. So you can just, toggle between by clicking on this column headings and see which is the highest, which is the lowest. Now, let's say you want to have a look at the Sharpe ratio. So Sharpe ratio typically tells you, okay, returns is fine, but what is the risk that these funds have actually undertaken to achieve these returns? So if you want to consider risk plus return, Sharpe ratio is something that you should be targeting. So this tells you what are the risk adjusted returns of each of the funds. Okay, so you sort this on the basis of Sharpe ratio, and you can see that, okay, the index Sharpe ratio is a 0.41. On the other hand, all of these funds that are really there, below this particular range, of course, this has been sorted in ascending order. You can see these have generated a better Sharpe ratio as compared to the index. So that's definitely a good thing. about these. On the other hand, these three have actually not managed to beat the index in case of its Sharpe ratio, right? Now, all of this analysis was on the basis of a benchmark, which is an index typically. If you would now like to understand, keeping aside the index, we would now like to see how have all the large cap funds, the entire category of large cap funds, how has it behaved, right? What is the category average Sharpe ratio of all the large cap funds taken together, right? That is again, that is something that can be used as a benchmark. So if you want to add that, so we have given that option as well. You just go here, add other items, and now click on the second row. So historical category average, because again, all of these are large cap funds. So just search for a historical category average for large cap. Just search large cap, and this will get added as again a row item in the compare section, right? So our category average has gotten added here. Okay. Now I just sort this on the basis of Sharpe ratio, and I can see that okay, Nifty 100 in this case has a Sharpe ratio of 0.41, but my category average is right here. So these funds have definitely given better Sharpe ratio as compared to the index, but these have not managed to beat the category average with respect to its Sharpe ratio. So you would rather go ahead and choose or recommend any of the fund from among these lists, okay, which have not just managed to outperform the benchmark, but have also managed to outperform its peers. That is exactly what we mean by category average, right? All the large cap funds taken into consideration, these are the funds that have actually managed to beat that as well, right? So these are super better performing funds, if that is something that we can use, right? So this can be quickly done. That's typically how you can actually compare it with not just a benchmark, but also category average. Now we've just taken an example of large cap. You can definitely take it for small cap, mid cap, or whatever category that you would like. Just follow the same process, add in a category average, add in an index, and actually come up with a list of funds that you would like to go ahead with, or you would like to analyze further, right? Once this is through, what you can do is, okay, on the basis of these funds, I would like to make a watch list, okay, which is something that I would update maybe on a monthly basis, or maybe on a quarterly basis, right? And you do not want to repeat the entire process of this analysis. Then we have a very useful feature called as save this list. Okay, so before saving that as a list, I will have to ensure that I have only those funds which really I want to include in my list. So let's say, first of all of these these really do not perform well with the benchmark, right? So what I can really do is I can just delete these funds from the list by just clicking on this delete icon, and all of these funds will get removed. So just go on clicking on this delete icon, and all the funds that really do not satisfy the parameter that we have really set will get deleted. Once they get deleted, you can simply name that list as a, let's say, watch list of August. Okay, once this is there, let's say these are the funds that you would like to include in your list, these 13 items. You go here at the top compare section, save this list. You name it as, okay, August large cap watch list. August large caps 1, and I click on save. The moment I do that, it will get saved in your login. Okay, so you can locate it from here. So we saved it as this August large cap list with 13 items. Now, the next time you log in, maybe after a couple of days, or maybe next month when you come to this, you will not have these funds in your list, right? But you want to see quickly, okay, what were the analysis that I had done, and what were those funds? You can simply click on my lists. And of course, only those lists will be visible to you which you would have saved. In this case, you can see all the other lists, because this is a company login, and then you can see all the other lists which have been created by other members of our organization, right? So in this case, you can just locate that particular list and click on that. The moment you do that, all the 13 items from that list will load here, and you can definitely have this in front of you, right? You can typically use this list. So this becomes a very efficient option when you're analyzing a watch list, or you can create a watch list, right? Now, before moving ahead, let me just add some of the underperforming funds also, because otherwise, if everything is a better performer, we will miss out on some critical parameters when we come to risk versus return or a rolling analysis. So let me quickly go back to funds. I will again click on add all of this to the compare section. So we again have all the 17 items. Once we have these, we will now go ahead and understand the second parameter, which is the rolling analysis. To understand rolling analysis, what we'll really do is we'll click on the second tab here, which is after the main list. You click on rolling analysis, and this is where a detailed rolling analysis, which tells you the consistency of each of these funds in generating returns, loads up. Okay, so you can typically set in a rolling window. So the frequency of by which we calculate rolling is always daily frequency. This is a daily rolling return. Whatever you can see here, rolling window is something called as a holding period. So let's say if a particular investor or a particular client holds in for a period of 260 days from a start date to a end date, right? Any particular time period, so basically any 260-day time period from whatever start date and end date that you put, what would be the average returns that would have been generated historically speaking by each of these funds? So for that, let's just consider a 2-year rolling. So for 2-year rolling, we need to multiply 260 by 2. So why do I multiply 260? Is where everywhere on this platform, we consider 1 year as equivalent to 260 working days. Okay, so you want to increase it to 2 years, just make it 520, multiply 260 by 2, so 520. Again, let's put in a start date starting from, let's say, 2019, so 4-year period. And end date would be latest, so yesterday's closing prices. Once I put this, I click on run. Okay, and I can see that, okay, these are the average returns that were generated by each of these funds. You can see that the highest average has been given by a Nippon India large cap fund. These are average returns, by the way. 2-year holding period average returns invested between 2019 to 2023. Any particular 2-year window between 2019 to 2023, what would be the average returns generated by each of these funds? Okay, the highest that Nippon India large cap fund, the highest returns that would be really generated by this Nippon India large cap fund would have been 62%, right? So it can go as high as a 62.99%. On the other hand, it can go as low as 12.65%. Okay, so if you take a modular difference between that comes to a range. So there's a swing between as high as a 62 and as low as a 12% in a 2-year holding period. Of course, the moment you change this rolling window, this data is this data is definitely going to change. Okay, and the last column tells you what is the percent or what is the chance of each of these funds generating returns in the positive quadrant. Okay, so if we assume there are only if we consider only two quadrants, one is above 0 and one is below 0. So below 0 meaning negative returns and above 0 meaning positive returns. If we consider there are only two quadrants, then we can see that, okay, all of these funds other than this one, which is a Axis blue chip, all of the other funds have actually generated positive returns in a 2-year holding period from 2019 to 2023, right? On the other hand, Axis blue chip, and you can clearly see that here, Axis blue chip has recorded a lowest return or the lowest possible return in this 4-year period, considering 2 years holding, is a negative 1.03. That means it has gone in negative. And that is exactly the reason you can see that the positive percentage is not 100. Right? That is how you actually make sense of these data, because the lowest that it has gone is a negative percent. That's the reason the positive percent is less than 100. Okay, so that is what you can make out from the rolling returns analysis. Now, a very, very crucial rolling returns distribution. So what we really aim to do here is we try to classify or regroup all of these funds on the basis of the intervals of returns that they generate returns in. Okay, so how can you make this more relatable and less of data? So let's say a client comes to you and says, okay, I want to invest into large cap funds, but my target return range is to generate returns anywhere between, let's say, 10% to a 35%. Okay, that is his target return range. He does not want anything that is below 10, right? So that is his target return range. So all you need to do is go to rolling returns distribution. And let's say, of course, the holding period, if he says, is a 2-year period. Then you just put in the rolling window as 520 days. And in any of these buckets, so we have given 5 buckets, 1, 2, 3, 4, and 5. In any of these buckets, put in the client's target return range. So for an example, I'm putting it here in the first bucket. I will put the from as 10. That is his basic minimum, bare minimum expectation from his investments, right? So 10% to a hypothetical as high as a 35%, if that is something that he wants to cap it at, okay? You put in the target start and end return ranges here, and you click outside. So you can typically see that Axis Blue Chip as a fund in a 520 or a 520 day rolling window, it can generate return between the client's target return range 62% of the times. That means Axis Blue Chip meets client's returns expectation 62% of the times. On the other hand, there is this particular fund, Baroda BNP Paribas Large and Mid Cap Fund. It meets the client's target return range, that's 10 to 35%, 79% of the times. So you would definitely go ahead and choose that fund which has a better probability of backtesting returns in the client's target return range, right? So typically you can see that, okay, Nippon, ICICI, HDFC, SBI Blue Chip, these have a probability of more than 80% of meeting the client's target return range, right? So this it would definitely make more sense to go ahead and choose these, right, than maybe your Axis, because it meets the client's return expectation only 60% of the times. That means there are 40 the other 40%, it can go in any of the any of the side which is not between 10 and 35. So it could be low, it could be in less than 10, at the same time it could be higher than 35 also. So that is a caveat here. You need to ensure that you build such return ranges as a waterfall model, okay? So this could be like, okay, you want to build in return ranges. What you can typically do is you can specify the first as, let's say, a negative, negative 10 to, let's say, a negative or maybe a 0, right? So you want to see the negative quadrant, how much of it generate in the negative quadrant. So just specify that time, specify range, and you can see that, okay, none of the funds actually generate returns in the negative quadrant. And that is exactly what is visible here, right? Percentage positive is 100%. Only one fund, which is Axis Blue Chip, actually generates returns in the negative quadrant, right? And here, after that, you can just go on building intervals. So 0 to 10, 10 to 35, 36 to whatever, 45, and so on and so forth. You can actually create such ranges and showcase it to the client. Okay, look, these are the funds which meet your target return range maximum % of the times. And then you can ultimately go ahead and recommend that. So why this fund? This is a very good answer or very good logic to answer such questions from the clients, right? And of course, this will definitely depend upon the rolling window that we choose. The moment we change it, even if you do not put anything here, it will default take in the lowest and the highest range, and it will default divide the intervals in that manner. So in this case, I will just quickly show how I will just change the rolling window. So let's say 260 days, and without any customizations, it will automatically take in the intervals accordingly. So I've put in 260 and I click on run. The moment I do that, it will automatically choose in such intervals, so the class intervals, in such a manner that it covers all the observations. So how how do we corroborate with that? So just click on low and sort it on the basis of descending order. So highest low is basically the worst return has been given by a Nippon India large cap fund in a 260-day rolling window, which is negative 15.33. And that is exactly the lowest interval for the start of this rolling distribution. So 15.33 negative, that is the start interval, right? And the highest that the list of funds that we have, the highest that can go is a 94.86, again SBI blue chip. Okay, and that is exactly what has come here in 94.86. That is how we ensure that we've covered everything, each and every observation, and therefore you can see the remainder is very, very less, just 0.13 of one particular fund. Other than that, everything, each of the return observation has been covered in these return ranges. These has been automatically calculated. Of course, you can customize this, but that's how a rolling returns distribution comes up. Let us now go ahead and understand the risk versus return parameter. So risk versus return is a scatter plot that is there. And if you just click on that, so it will typically divide all of these funds that you have in the main list into 4 different quadrants. The 4 different quadrants that will be are low risk, high return. That's here at the top left hand side. Bottom left hand side is low risk, low return. Right hand side, high risk, low return, and high risk, high return. Now, if you see the x-axis, we have annualized risk or the standard deviation on the x-axis. So that means if a fund gets plotted more on the right-hand side of this on this x-axis, that typically means it takes higher risk. Okay, so in this case, DSP top 100 has a risk of a 17.01, right? Annualized risk of a 17.01%. On the other hand, LIC mutual fund, right? This LIC MF large cap fund, it has a risk of a 15.67. So you can see this difference. So because this is on the left hand side, you can see the difference between the risks. So the more the fund gets plotted on the right hand side, it means it takes in higher risk. That's how you read the x-axis part of it. Now on the y-axis, we have annualized return. Okay, so the more it gets plotted on the higher end, okay, the more it is plotted higher upper of this particular quadrant, it says it has a higher return. So in this case, Mirai Asset Large Cap Fund has a return of a 14.20%. On the other hand, let's say this Bandhan Large Cap Fund has a return of a 10.88%. So 14 plays a 10. Right, that is how the difference is. So that is how these funds get plotted, and that is how you should read risk versus return. Now once this logic is clear, we will now put in a start and end date. So in this risk versus return, again, let's let's be a little consistent, and let's put in a 2019 4-year period only. So 2nd of September, end date 31st of August, and click on go. And now you can see that, okay, these are the classifications of each of these funds. Now, if you were to choose between a particular set of funds, in this case, it is typically a no-brainer to go ahead and choose a Kotak Blue Chip in comparison with a Mirai Asset Large Cap. And why do I say that? Is because Mirai Asset Large Cap Fund not just takes in higher risk, but also gives me lower return at that risk, because it has gotten plotted further on the right hand side as compared to Kotak Blue Chip. Just focus on Kotak Blue Chip and Mirai Asset Large Cap. Okay, it takes in higher risk, but it gives me lower return also. On the other hand, I have an alternative in the form of a Kotak Blue Chip fund, which gives which not just takes in lesser risk, but also gives in a better return as compared to Mirai Asset. Right, so if you want to just choose between a set of 2 funds, you can definitely go ahead and come to risk versus return and actually check what are their what are the parameters with respect to risk and returns over a time period, and you can make easy decisions basis this scatter plot. Okay, you think this is more crowded, you can just untick these labels and these labels will go away. These will be only dots. It will show up the name only when you hover on that particular dot. Okay, so those things that you can definitely play around with. You can also zoom in and zoom out. So let's say you want to have a better look at these set, which is a cluttered set here. Just choose this time period here and it will zoom in. All the others will be out of the picture. Right, so this is where you can zoom in, and then you can just show data labels, and this will be there. Right, so that is something that you can definitely play around with. That's the risk versus return part. Let us now move ahead towards the last discussion on the webinar related discussion, which is a very, very crucial scenario analysis. So why do I say scenario analysis is very, very crucial is because in varying time periods, you want to see that how did these specific events affect the performance of each of these funds. Okay, so for that, directly head over to point. And we have given 5 different buckets. Okay, and you can definitely choose between either you can see this in amount terms or annualized percentage terms or absolute percentage terms. So in this case, I have built in 5 different scenarios. The first scenario is a 5-year period. Okay, 31st August 2018 to 31st August 2023. Of course, this is absolute terms. Let me consider annualized terms. If I check annualized terms, which was the fund that gave in the best? So Nippon India Large Cap Fund has managed to generate the best returns in this 5-year time period, right? On the other hand, if I consider just a year-to-date performance of each of these funds. Now, because this year-to-date performance typically means that the period is less than a year, you should go ahead and choose absolute as a toggle button, and then you will see the actual performances of these. You now choose absolute and sort this on the basis of ascending or descending order. You can see that again, Nippon India is the better performer. Right. The third scenario that I've built is a typical COVID scenario, right? There was just lockdowns that were coming in, and you can typically see each and every fund actually gave in negative returns, right? Typically, you can see that Canada Robeco fell the least. Again, Axis is somewhere here in the middle. And the worst performer again was a Nippon India large cap fund. And you can see the swing, right? It seems the volatility of this fund is very, very high. It goes as high as, it can become the best performer in a decent time. And in worst times, it can be the worst performer as well. So it can go extreme ends, right? These are 2 extreme ends that you can see here, right? It is the best performer in this 5-year period. On the other hand, it is the worst performer in this 6 odd months that we have considered here, right? Now, the next scenario that I've built is like a Axis front running case scenario. So in the last year, 2022, there was news on the Axis AMC, the 2 fund managers, front running case was there. And then typically, if you were to compare it with its peers, all the other funds from the large cap category, or for that matter, a small cap category, were performing better. Only this particular fund, which is this was a basically news driven action that was coming in this particular fund, and that is exactly what is visible here. You can see the least performer in this particular period, 2nd of May 2022 to 31st of October 2022, right? In this particular period, this was the worst performing fund, 3.68 returns, 3.68% returns only. On the other hand, we had a Nippon and a DSP and a ICICI Pru Blue Chip, which have clocked in more than 10% return, right? This is typically something that you can definitely do. You can also build in a financial year scenario. So typically for a calendar year, you need not build a scenario, because calendar year analysis we anyway have in the years tab. Okay. Typically for a financial year scenario, you should definitely use this point to point. Let's say you want to do this for the past, financial year, let's say 2022. So let's say 1st of April to 31st of March 2023. So you can definitely do that. In addition to that, you can also build in scenarios like Russia-Ukraine war, or whatever scenarios you take into consideration in this particular financial year, for that matter. These are the funds that have given in positive, and these are the funds that give in negative, right? So Axis, again, you can see since the last 2 years, it has been a consistent underperformer, and that is exactly what is visible here. For calendar year analysis, we have a dedicated calendar years tab, wherein you can go to years and you can actually see in the form of a heat map also. So in, let's say, 2019 general elections, right? This particular year, Franklin was the best performer, right? On the other hand, worst performer. On the other hand, this is the contrast here. So Axis was actually, in fact, in 2019, the best performer among the lot. And after that, in this particular 2022, right, it was the worst performer in this particular calendar year. This is something one overview types, bird's eye view analysis of all the returns performances of each of these funds, right? So you can definitely use this for analysis. Now, we saw this in percentage terms in point to point. You can also do this in amount terms. For that, just click on this lump sum investment value. Click on this, and you will get a tab wherein you can put in an amount. So let's say you want to do a scenario analysis with amount. So let's say 10 lakh rupees invested across all of these funds in from a start date of 31st August to 31st August 2023. 10 lakh would have become 18 lakh 30,000 in Nippon India Large Cap Fund, right? That's similar to a lump sum investment performance, right? So that is something that is available as well. So this is how you can effectively use point-to-point analysis for doing a scenario-based analysis for a set of funds. That's typically it from my side for the topic-related webinar. If you have any questions, please unmute yourself to ask, or you can even type it in the chat box. Thank you.
Hello.
Yeah, please go ahead.
Yeah, sir. Sir, regarding that risk versus return chart. Yeah. Say example, if I want to select ICICI Pru Blue Chip funds Sharpe ratio, those things, how can I check?
See, this basically shows you risk versus return, but what you're seeing in front of you right now, there you can directly see the Sharpe ratio. So basically, if you load a set of funds, or maybe a whole category of funds, or just your portfolio or something, you can check it on that table. And plus, individually, you can also check the Sharpe ratio.
Fine, right.
Yeah.
Yes.
So, Prajakta, just let's show that table again. So this column here, and you can click on that button to sort it from largest to smallest also.
Fine. Okay, okay.
So there's a question in the chat box which says, ma'am, for the rolling analysis, the segregation below of 10 to 35, 35 to 70, and so on, the percentage that is showed below for the funds is probability of hitting that target, right? Yes. Yes. It is the probability of hitting that target, correct? So in this case, if you see that in 260-day rolling window, between a 6.70% to a 28.74%, if it says that Nippon India gives, one second. Yeah. So if you see that, okay, SBI Blue Chip gives 39.29%, that means that 39.29% is the probability that SBI Blue Chip will give returns between 6.70 to 28.74. It is the probability that it meets that return range.
And you can change these numbers in the boxes if you want to create your own range.
There's one more question in the chat box which says how we can do analysis of funds having close portfolio overlapping or correlation. Yeah, so you can just, we have a dedicated overlaps and a correlation tab. You can see that in tandem with each other. So in coordination with each other. So just click on position overlap and you will see between a pair of funds. So let's say a Axis Blue Chip and let's say a Bandhan large cap fund. There's an overlap or common positions of 51%. If you want to drill down this, just click on this 51% cell and you can see that, okay, ICICI Bank as a stock is held by both these funds. Okay, Axis Blue Chip holds 9.87 into ICICI Bank. Bandhan large and mid cap, large cap fund holds 9.88 into this particular stock. And therefore, the lower of the two or the minimum of the two, typically lower of the two, is the overlap. So 9.87 is the overlap. So in this case, Reliance Industries, right? Both of these funds hold 6.13. One Axis fund holds 6.13. Bandhan holds 8.19. And therefore, minimum of the two or the lower of the two is a 6.13. And that is exactly what is overlap. If you total all of this up, the overlap columns, that will come, the overlap column, that will come to a 51%. And that is exactly what overlap is calculated, how overlap is calculated. Now, in addition to overlap, you can also check the correlation analysis. So correlation analysis tells you how coordinated are the NAV movements of these two funds. So in this case, we can see that Axis Blue Chip and a Bandhan have an overlap of a 51%. Now let's quickly go to correlation analysis and see with just a 51% overlap, how coordinated are their NAV movements. So go to correlations. And again, locate only those two funds. So Axis Blue Chip and Bandhan. You can see that only with a 51% overlap, the correlation between these two is a 0.96. That means 96%, right? So typically, that means that if Axis Blue Chip is going up, 96% of the times, Bandhan large cap fund is also going up. Of course, vice versa is also true. If Axis is going down, Bandhan is also going down. So typically, correlation as a parameter ranges between -1 to a +1. So the closer it is to 1, that typically means higher is it is correlated. These two funds are correlated with each other.
Any other questions? Please let us know.
So there's a question in the chat box which says, do we have recommendations also?
No, so we don't provide direct recommendations because our company does not possess an advisory license and we aren't getting one either. So we provide tools for research, which you can use to then kind of come up with your own ideas. We obviously provide as many tools as we can, but we will never tell you that you should buy this fund or should buy this stock. So we do not provide any direct recommendations.
There's a question in the chat box which says, hi, can you show some light on SIP? Yes, definitely. So we have a dedicated monthly SIP tab wherein you can compare SIP analysis for a set of funds. So in this case, we have 17 funds and you can just put in a notional installment amount, let's say 5,000 rupees invested per month across a time period, let's say last 3 years, right? So 1st of September to, let's say, 31st of August, run SIP. And you can see, okay, the highest XIRR was generated by a Nippon India large cap fund. This is a comparative analysis of SIP across a set of funds. Now, if you want to do a single fund detailed SIP analysis, we have a dedicated monthly SIP tab here or a tool here. You click on this, a detailed SIP analysis tab will open. So let's say you want to run a detailed SIP analysis on this particular fund. Click on this. It'll get open in a new tab and you can just see how as the as the period passed, what were the units that were acquired, what was the change in the NAV, and all of this can be exported into a report. So this is how a 2-page report will look like. Yeah, so this is how the 2-page report will look like. The first page will be the synopsis of it, and then the detailed analysis. And in this SIP tool, you cannot just load mutual funds, but also stocks or indices for that matter. So again, this is a large cap index. Let's say, I mean, you want to load in an index and see that how would have Nifty done in the same period. So you can see that Nippon is 22.38%. Just load in a Nifty 100. Same period, you can see what are the stats that it has given. Right, so all of that is possible. So there's a question in the chat box which says, do you provide financial analysis, financial planning tools as well?
So we don't have any direct planning tools in terms of goal planning, etc., or tracking investments. But you can, of course, use the SIP tool here. There are lots of other research tools that we have. For example, point-to-point analysis, where you can see how much money you would end up if you invest in particular funds from time to time. But basically, we don't provide any kind of direct financial planning tools because, generally speaking, they also rely heavily on lots of assumptions, i.e., earning X% rate for the next few years, etc. But we have some ideas that we are working on, probably in the medium term to be released, where we will try to kind of provide some mathematical forecasting of portfolios of funds, which might help plan your finances better from your client's perspective. So currently there are no kind of goal planning tools as such.
There's a question in the chat box which says, could you throw some lights on plotting of portfolios of funds quartile performance?
So basically with quartiles, we don't usually use quartiles. I mean, if you're talking about the quartile and stuff, if they're in the top quartile or the bottom quartile, or if you're in that case, we don't do that because obviously, it's not a continuous process. If there are 13 funds, it's impossible to have a top quartile. You'll have 3 funds in one quartile versus 2 in the others. So we actually use simple sorting, which you can see on the fund section. If, on the other hand, you're talking about time quartiles like performance over time, we have various tools, especially rolling analysis for that. But if you're talking about quartiles in terms of which quartile these funds reside in, we don't use that, and we probably will not be doing that either. Again, because it's impossible to segregate or divide a certain number of funds exactly into quartiles unless they're divisible by 4. So that really kind of defeats the purpose of analysis, because just because of the change in number of funds, for example, in a particular set of funds, a fund will move quartile. So instead of that, what we do is we use sorting, where you can actually see which fund is better than the other, and you can see the order. And that's a much better method. The other thing we are also working on instead of quartiles is a fund score, which is almost to completion. So we expect to be releasing that soon. Where every mutual fund will have a score based on risk, based on return, and an overall score. And that score will be, comparable to other funds in the same category. So we should hopefully be releasing that soon. Okay, there's a question saying, will you be adding overall client portfolio PE and PB? Yes. I mean, this has been a pending requirement for a while now. Generally speaking, the PE for mutual funds that being provided by our data provider was sometimes causing issues in terms of not matching with what the AMC thinks versus what some other platforms think. All 3 numbers were different. So we did kind of we decide not to release that before we can sort out issues with accuracy. So at this point, we aren't releasing portfolio PE, PV, but we do have those numbers. Again, the problem with it is PE can fluctuate depending on data source quite a lot. So we will, keep you updated about what we're doing. Of course, if we release a portfolio PE, portfolio PV for any portfolio, it'll be there for all model portfolios as well. Okay, so simulating risk and return simulation in Monte Carlo. So that's exactly what we were talking about when we said, when we talked about financial planning tools, which would basically look at your portfolio and provide some Monte Carlo analysis to give you various different future paths of your current portfolio. So that's something that we have in the background. It might take a little while to get released, but that's exactly what we will use. Monte Carlo is one of the methods that we will use. And currently, what we have is a portfolio backtest. We do have some not recommendation tools, but portfolio improvement tools where you can put an existing portfolio and we mathematically give you quote unquote better allocations to any portfolio based on risk return, etc. Okay, fund manager detail for funds. You can already see them. If we just load a fund, Prajakta, just load anything, or I think you have something open. Yeah, so we have a fund manager tab here, so you can see details of fund managers, and you can also see which other funds they manage. Any other questions, please let us know. Okay, if there's nothing else, Prajakta, you can go ahead and close for today.
Yes, thank you so much for joining in. You will definitely see the recordings of these webinars on our YouTube channel. Definitely check out those playlists. You'll see all the previous webinar recordings there as well. So thank you so much for joining in again and have a great weekend. Thank you.